Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 30th of June. All right, now just battling away with a bit of a flu here, but the dollar index hits 2-week high, right? As if that's a big headline, all right? 2-year high might be a big bit of interest, but this is what you get in the last week of the month, right? We've got a lot of ambiguity from, or generally speaking, from central bankers this month. We've got central bankers all talking interest rate hikes up, especially Jerome Powell. Now, he's gone through the ECB central bank policy panel the last few days. I think he's just spent some time in Madrid and said, yeah, we're going to raise rates. So the chance of raising rates in the US next month is, I think it's up around 85% by 0.25%. They've taken off the table a chance of a rate hike. Bank of England are talking about interest rate hikes, ECB. They're just trying to get it out there that, okay, we've still got more work to do. Interest rates are going up. Now, that is the key thing, especially the US, right? So when we look at the markets, you're trying to piece together here, does the story fit what's actually happening? Well, it does on some fronts, right? We are seeing the dollar index up, okay, a little bit of pressure on euro. It's not like it's a massive rate hike, right? This thing's already factored in, but we are starting to see the dollar drift lower. Gold is finally just tipping down below $1,900, but sort of just hanging on a little bit. Oil sitting around that 69, 70 bucks a barrel. This is the part that sort of I don't get. If it's so, well, this actually sort of goes somewhere. I was going to say, like, it doesn't make sense that equities, US equities would be rallying if the expectations were for higher rates. But you know what? The higher rates aren't for a few weeks. So, you know what? And it's so factored in, the 0.25%, that, you know what? The equity markets have probably got room to move up and down pretty freely. It's more the surprise rate hikes and rate cuts that really stir up the equity market. So to me, the 0.25%, because Jerome Powell's been out there telling everyone that that's what they're doing, right? It's now become obviously fully factored in, and we're now sort of sitting here waiting for the event. Now, cryptos, I'll tell you what, jumped up from 26,000 up to 30,000, just made a bit of a home there. I'm always like, yeah, it's like whoever's got the most cryptos can put it wherever they want, but that's another story. Now, so looking at the currencies, we know the yen is becoming, it's more like a sideshow, right? You'll get the pressure points here around when is the BOJ going to intervene? Well, I tell you what, as I said, it's like a weaker yen is better for the Japanese economy, right? That makes them globally more competitive. So they could probably sort of sit tight until it gets up to around 150, right? It's when they go quiet, when no one's saying, hey, it's high, it's too high, it's too high. That's when you want to be careful. And that's when you see like a 500, 600, 700 point move in a couple of minutes. But dollar Swiss just drifting a little bit higher. Dollar CAD was the one that, you know what, looking back on with a bit of 2020 vision hindsight, okay, we had the weaker Canadian numbers. The CPI numbers took the pressure off the Bank of Canada. No more sort of rate hikes in sight. The dollar was already sort of starting to go up against most instruments, and oil was falling there as well. And that sort of leads to a higher dollar CAD. You feel a bit stupid afterwards looking at this. But in saying that, the price action around these trend lines here was not by any means easy, right? So I was looking at that thinking, yeah, okay, you're a bit stupid. You should have got on that. But you know what? It's often harder than it looks. Now, this is where, like, this is what is going to be frustrating many traders, right? You see a nice clean breakdown here in sterling. Then the price action just gets completely discombobulated, right? We had strong retail sales figures yesterday in Australia, pops up 20, 30 points and straight back down, right? Looks like the Aussie and Kiwi have got unfinished business and it's much lower, right? Especially with the Fed now sort of looking to raise, well, are raising rates. Let's get real with that. So, and this is the funny thing, right? So there's a bit of discombobulation along some of the major pairs here between euro, sterling, Aussie, Kiwi. They're all quoted the same way against the dollar. They usually behave the same way. Now they are trading a little bit downwards the same way, but the interest rate expectations for each is somewhat different. Okay, higher rates expected in the ECB, not as aggressive as as the Fed, etc. Higher rates expected in the UK, right? Australia, no more rate hikes. Inflation's terrible. Canada, no more rate hikes for the moment. So that's a higher dollar, lower CAD. And the Kiwis, well, that'll just follow the Aussie, but everything's sort of just drifting along there. So what I'm piecing together is here, excuse me, the last week of the month, right? Can sometimes be a nice, easy trading environment, or other times, excuse me, it can be a little bit baffling. And this is what I was sort of focusing on at the start. The overriding theme is, okay, the US are going to be raising interest rates next month by 0.25%. Another 0.25% is factored in before the end of the year. But we're only just focusing on the US. There's other central banks in play here. So don't get sort of, I guess, steered in one direction by the media, right? Yeah, the dollar's ticking away. That's great. But there are things that they aren't focusing on, right? They can really cherry pick different things. And if I bring the economic numbers over here, this is from yesterday. Yeah, sure. If GDP is up, and that's a pretty big thing. It means the general economy's going much better than they expected. There was no word about how shit the home sales numbers were, right? I don't mean to be rude about that, but that's cherry picking. The initial jobless claims, okay, 239 versus 265, the consensus. That's no big deal, right? And I know in the media they were sort of saying, oh, it's 26,000, less. That's the lowest in 20 months. It's they can turn the numbers to be exactly what they want. The fact is, the Fed are looking to raise rates. We just need to accommodate that. Be conscious about the Bank of Japan. That can be a sideshow that is distracting everyone from what's happening in the rest of the market. But with the yen as a bit more of a focus, it does bring the Japanese numbers into play. So traders in Asia, have a look at the yen numbers, see what impact they have on the Nikkei in particular, and then we can sort of start to piece together what's happening in dollar yen. Overall, right, we get weaker numbers here. You've got to expect dollar yen to go up, okay? And the Bank of Japan have probably learned something over the last 30 odd years, that you can't fight the fundamentals. They need the fundamentals to turn. So for instance, if the fundamentals here were all really strong, right, and dollar yen kept on rallying, so like a weaker yen, well, that's a mismatch, right? They will probably go when the numbers match up, right? And that's when they, I'm not suggesting they'll do it today, but that's the way it sort of generally rolls. We've got some private sector numbers out of Australia. Yeah, maybe something there. You got this consumer confidence number coming out. Well, it did come out in New Zealand. I was having a look at the time there. A little bit better. Is that going to have much of an impact? I don't think so. That's like an advertising number. Now you come back down here. Now we've got some manufacturing PMI out of China. Important for the Aussie and Kiwi. I mean, looks like things in China aren't going that so good either. You got German retail sales. There's a whole bunch of things coming out here in Europe, right? So German retail sales, same time as the final GDP numbers out of the UK will be quite interesting. Then we roll into the Swiss retail sales. Now, Swiss numbers are like Kiwi numbers. They're tiny, right? You'd need significant variance there to get things moving. Some unemployment numbers here out of Germany, and that rolls us into, it is occasionally the Eurozone inflation and unemployment rates do come into play. And to me, with the way that Christine Lagarde, the ECB, have been talking, this has got to be one on your radar, right? This number here, the inflation rate and the unemployment rate, right? These two things are key to what's happening. Like as far as forward guidance, we've got Jerome Powell out there beating his drum saying, yeah, we're raising rates. Like, can't wait to get back and raise interest rates. It's going to be so much fun. We want to see what the ECB are going to have to do as well, right? CAD GDP numbers, our overall health check of the Canadian economy. And then you come into some more sort of heavy hitting numbers here. The PCE price index and personal spending numbers, personal income. This is probably the big numbers for the US dollar for the week, right? Now, we are expecting a 0.25% interest rate hike. These numbers strong, it's going to push that even more aggressively. Weaker numbers, we need significant weakness to get these numbers sort of really rocking and rolling. So if you're in the European North American session, make sure if you've got time, check out the PCE price index numbers. This is the one that can have an impact on the major currencies. Equity markets, yeah, maybe. I don't know. They seem to be a little bit out of whack at this point in time. And we come into later in the session there, those nationwide housing price numbers, a pretty good number for the UK. Okay, from my time in London. You've got the Michigan consumer sentiment numbers, the final numbers, usually pretty close to the mark, but we'll keep an eye on that. And the Bank of Cab business outlook numbers. So there's a whole bunch of things coming out today. This is probably the best day of the week as far as, you know, if you were sitting in front of the screens, especially when you come through the start of the European session, you're going to have things rolling off every half hour, every hour, pretty much right through the session as we go through the North American session there as well. All right, so lots to look at. The major confirmation that I would be looking for is the US numbers here to really solidify, not only, well, Jerome Powell's already told us they're raising rates, but what's going to happen after that. That's what we want to know. And really strong numbers here go a long way to projecting a stronger dollar for the coming months, not just next month. All right, so that's what we're really looking for. And the Eurozone inflation and unemployment rate, you get these things working in tandem, like really strong inflation and really, really good or lower unemployment. You're going to see the euro rock to the top side. And that can be conflicting with the US numbers. So make sure you piece these things together. Don't just rush in and go, yeah, I'm long euro because I got good euro numbers. Because if the US numbers come out strong, it's going to get belted straight back down anyway. All right, so that's what I'm thinking. The only other thing you could be doing at this point is just get into your, if I just come over to my tech page, into the longer term prospects for each instrument. Try and clear the air, clear your mind around, okay, what's really happening here, right? And I've just purposely left these charts a little bit unkept so you can see where all the trend lines were. Now we're going to focus on the price action here. I mean, check this out. That's like a dog's breakfast. Very hard to pick. Now, if I come over here and fine tune the dailies up, right? You're looking for clarity. You want to know, okay, is this thing going up or down, generally speaking, or is it just trading sideways? To me, on a daily perspective, the euro is just grinding sideways, right? So you can get caught up here in all the noise here of the hourly charts when overall it's sitting there waiting to work out whether it goes up or down. And that's where you can find the difference on the daily charts. So make sure you go through your major instruments here, work out exactly where the trend is, if there is one, or if it's just grinding, and then you can start to really lean on some positions here, right? So like even sterling, I mean, everyone's going to be looking at this daily trend line. It's pretty convincing. But does that match the fundamental picture? Well, it does if the US are raising rates, but if the UK are as well. But do we have major UK data today? Not really. Got a few GDP numbers, but anyway, so what I'm trying to get into your mindset is looking at the hourlies, it can be confusing. The dailies can often clear things up as to really what's going on. And to me, the trend is your friend. Or if we have a pressure cooker where the trend's about to snap, that can be the next situation there as well. All right, guys. So anyway, the key part to it is this last week of the month, you're trying to tap a few extra bucks into your account. It's not like we're going to see massive shifts like immediately. It's not the best trading day, Fridays. The good thing is we don't have like non-farms up. It's next week. So you'll have better liquidity conditions for trading. It's just a matter of trying to work out exactly where the price action actually is going, right? That's the tricky part. And with that, you can come back, get up your main global markets page and just start to tune in and see if there's any sort of like light correlations between what the US equity futures are doing and say what the major currency pairs are doing. Now, the clocks have just changed over, so there's no sort of clear path there. What I can see very clearly at the moment, Kiwis are down against sort of everything, as is sterling. And you've obviously got this pressure cooker over here with the yen crosses. Okay, so there'll be more next week. We start a fresh month. We've got fresh opportunities, fresh data. Let's clear the slate. Look forward to that Fed rate hike and see what impact that has on the other major currency pairs and trading instruments. All right, guys, all the best. Cheerio.